Alright, Chapter 5, the Etany Principle. Statement of the principle. The railroad etany should compromise the activity affiliated with railroads. The railroad related to affiliates. Affiliation is defined with the conformance of general accepted accounting principles. Railroad etany measure the report information railroad related activities conforms with the general accepted accounting principles unless otherwise performed with specific railroad accounting principle. Railroad related with the activity thereby provided within support with the railroad operation. The non-railroad related activities are included with the entity. They should be segregated with the information reported separately. Any railroad related transaction between the railroad entity and others, including the affiliates that are not railroad related, or reach classification between railroad related and non-related statuses within entity should be recorded as the fair market value at the time of the transaction. Reclassification gain loss but be recognized at the same time. Explanation. The entity principle defines the activity to which the railroad accounting principles apply with broadly described the requirements for the reporting as one of the objectives designed to treat the comparability of the railroad entity for the comparable manner, thus in underlining the railroad activity the two railroad enterprises are comparable. The entity principle ensures that those enterprises will comparable entities regardless of the numerous organizational, legal, and corporate forms that they may take. The entity includes the subsidiaries, other affiliated parties, directly and indirectly, though, who one or more intermediate controlled, or under common control of the affiliated railroad. The railroad accounting principle adopted the general accounting auditing principles. Definition of control is identified with the Financial Auditing Standard Board, the statement number 57957, related party disclosure. The position directed and direct with the power to direct with the cause of direction with the management policy of the enterprise through the ownership of the contract otherwise. Unless otherwise specified the railroad accounting principle, the entity should rely on the general government accounting auditing principles to help ensure the both consistently accuracy accounting. Both focus on regulation railroad-related activity. The railroad entity needs to measure the report information with railroad-related activity. The activity is not limited to the direct railroad opportunities such as the track line or the locomotive, the car repair. They can include general support operations such as computer services or sales or marketing services. Some non-related activities may be included with the data integrity region when the railroad entity is included the non-related activity. Those activities generally must be segregated with reported separately. The segregation related to information with the non-related information, particularly practicality principle applies. To the extent of segregation, the railroad entity activities affiliates with the impractical practicality principle permits either the inclusion or exclusion inter-affiliated on the basis whether or not the affiliate predominantly railroad related, the entire affiliate is reported with the railroad operating. If not, our entire activity is excluded by the affiliated with the affiliate with the predominantly railroad related if they cannot continue to exist for the revenue derived from or the support provided by the railroad operations. The requirements of revenue adequacy of the principal consideration establishing that any principle of the return of the investment criteria for the use of the railroad adequacy determined most closely conforms to the railroad enterprise requiring assets, deferred taxes, liability, revenues, expense for the reported with the railroad related activity as a whole. The reporting requirement can be met with the submission or filing of the condensed combined with the balance sheet, consent estimate statement, operation, additional details, statistics, other information, including the R1, are not necessary for the revenue adequacy determination. With the entity principles specifically describe the railroad enterprise as a whole, other railroad accounting principles may require small entities with specific regulatory application. For example, the competitive access for the casualty homogeneity principle may require the use of the components of the parts of the entity. The individual R1 reporting continue with the government processing government purpose costing system and any of the data integrity parts indicated with the individual reports railroad companies included. The entity should reconcile the amounts that would report the railroad entity as a whole. The reconciliation requires the railroad entity consists of a combination of railroad related affiliates, not all, but any may report the Interstate Commerce Report Committee Commission report the R1 schedule, therefore with a number that may be not added with the traceability statements affiliated included. Three components of the entity principles are presented to be analyzed separately. They are: 1. Determine the railroad entity. 2. The requiring use of the government accounting auditing principles requiring the fair market value recording the transaction between the railroad and entity and others. Alright, alternatives. Establishing entity principle. The railroad accounting principle broad definition of the railroad entity is considered the rejection of the following alternative. The Interstate Commerce Commission R1 entity, the operating entity, the Interstate Commerce Consolidated entity. The Interstate Commerce Commission R1 entity. Till December 1986, the railroad used the R1 entity to determine the revenue adequacy of the Class 1 railroad structured in separate legal entities, reported annually the result of the operation related financial statement in accordance with the Interstate Commerce Commission. They separately reported the railroad operations and non-railroad operations. The operating entity, the alternate representative of the narrow definition entity, must be viewed at the lowest possible reporting level of the function separate transportation operating level, requiring the R1 entity typically consists of multiple operation entities. The alternative probability would require most railroads for the file more reports than currently required. The Interstate Commerce Commission consolidated in December 1986 the ex parte number 393 sub number 1 adopted the revised the entity with revenue adequacy determination include the Class 1 railroads under the common control. They operated with the unified joint managed system. As part of the decision, the Interstate Commerce Commission required the inclusion of the subsidiaries are at least 50% owned by the Class 1 railroads, which passed the Interstate Commerce but the test. Your consolidated entity, the alternative combined with the affiliated railroad. There are related affiliates in single entity representing the consolidated railroad enterprise. The consolidated entity differs with the Interstate Commerce Commission's consolidated entity with several areas. Present the Interstate Commerce Commission with the practice to exclude the railroad related affiliated with the non-directly owned with the railroads, but require that 50% of the greater ownership of established control. 3. Use a different test for determination whether the affiliate predominantly railroad related. And 4. That does not require recognize gain or loss in railroad operating income for the sale of the reclassification of railroad operating assets. Your analyst of the alternative, the agreement of the selection of the entity that consists of the economic accuracy, practicality, data integrity, comparability, and confidentiality. Economic accuracy. To provide economic accurate measure of the railroad cost, the entity must represent the underlying business enterprise by providing the railroad transportation services. A business enterprise collection of economic resources the unified management controls owner creditors that have the economic interest regardless of the organizational legal form of the business enterprise supplied with the economic resources for the production of the goods and services that means for the organizing the production of the activities of the economic resources efficiently with the compensating those provided with the cash and non-cash resources. Business enterprise invests for the cash and non-cash resources, labor, materials, land, plant, equipment, and other goods and services produced. The sale of goods, services for the cash and claims to claim the cash. The business enterprise is economically viable to the sale of the goods and services with the bringing the more of the cash that was spent and obtaining the resource for the produce of the product. Cash received used to pay with the providing the resources of the supplier, employees, etc. was provided with the capital of lenders and owners. The positive cash and exemption for the positive cash flow of the future enable the business enterprise to obtain the goods, services need for the produce the product, and how to accurately capital refund in the form of the borrowed equity fund for the competitive capital markets Committee of the American Accounting Association recognized the need for the entity concept in 1965 when it was found that accounting principle is quoted that accounting principle is only when there is an area of economic interest that can be defined indeed with the essence of the entity of the concept of the accounting with defining the area of the economic interest exists. The possible identity of the accumulated report of financial information about the distinct from all other information without such entity accounting is impossible. The accounting committee would conclude that the result of the operation financial position of the accurate all business economic activity under the common control should be consolidated to present the single reporting entity. General transactions do not take place in the arm's length, but in the subject maintaining the controlling party. The most practical way of minimizing the effects of the other manipulation affiliates parties and required consolidation of the presence of the control determination consolidated with further support of the accounting research principles. Number 51 states the presumption of the consolidated statements are meaningful separated with the statements that usually necessary with fair presentation with one or more of the companies that grow directly and indirectly with the controlling financial interests from the other companies. Government accounting and auditing principles presume that consolidated statements are meaningful to other separate statements of the affiliates need the information of the individual lines of business in which are over diversified with the corporation for which they're engaged and has also recognized. However, the Railroad Accounting Principal Board recognizes the objective of the Interstate Commerce Act with the focus of the list on the total activity of the enterprise. Specifically, with the Interstate Commerce Act, the explicitly distinguishes the rail carrier from other modes with requiring the cost information. For example, the Interstate Commerce Act specifies the direction of the railroad revenue adequacy determined in Title 49 U.S. Standard Code 10704 A2. That the rate of responsible determination with consists of the information in Title 49 U.S. Standard Code 10701 and the jurisdictional cost of the test of market dominance of Title 49 U.S. Standard Code 10709. Moreover, Title 49 U.S. Standard Code 11162 requires the railroad accounting principle to govern the railroad accounting, with consequently the entitled principle requires the reporting with railroad related information. The principle relates such information combined with railroad and needs to address the concerns regarding with the significant transaction that may take place among the railroad affiliates. Several commenting parties state with combined with the reported affiliates that are not part of the unified joint management system should not be required. They maintain and that such cases desire to reflect the activities jointly controlled with the railroad economic enterprises. Achieve more of those over these parties. They are required to combine reporting the affiliates which are not part of the unified jointly management system would impose the additional cost reporting the burden producing the identifiable benefits. The primary concern requiring the combined reporting of the railroad-related affiliates and transaction among such affiliates do not take the arm's length affiliated predominantly railroad-related significant intercompany transaction-related railroad-related goods services are likely to occur. Consequently, significantly opportunities exist whether wealth transfer without recognition of regulatory purposes. The railroad accounting principle would consider the addressing of the transfer with wealth of the intercompany transaction by either the one direct regulation, such a transaction, for example, requiring the transaction to be recorded as a fair market value, gains or loss recognized at the time of the transaction consolidation combined with the accounting data, thereby eliminating the effects of the intercompany and transaction. Railroad accounting principle board selected with the latter approach of the basis of the practical data integrity principles. The data integrity principle would require the extensive documentation audit coverage to ensure that they would party per transaction provide results similar to the obtained from the fair market value transaction. Considered at arm's length, audit coverage would involve the considerable expense, even so that they would retain certain subjectivity. Railroad accounting principle board does not affect the manipulation could be eliminated more practical with the consolidation railroad affiliated under the common control, eliminating the effect of the regulatory measure of the transferring of the price. System regarded with the unified jointly managed system imply that the one transactions affiliate with not part of such a system that frequently material both separately and collectively. 2. Transfer processes decisions made at organizational level using company policy which consistently requires fair market value to be used. The practical principle will be permit the interstate commerce to exempt the reporting with railroad affiliates which are able to demonstrate that one or two of the conditions are met. Another common question is benefit with requiring with the non-control companies, including with the railroad and if they're using the cost of equity method and required exposure draft. Both of the railroad accounting principles that there will be less of incentive of the interference with the wealth and non-control companies. Non-controlling ownership interests with the railroad-related companies should be either excluded with the railroad and either considered non-related or segregated from the railroad-related information. All right, practicality. There are three components of practicality: feasibility, cost efficiency, and materiality. Feasible does not discriminate criterion, since all alternatives consider the feasible cost effectiveness of the major discriminatory criteria posed primarily subject with the section materiality has been applied with the cost effective economic accuracy. Either consolidated adopted the railroad accounting principle board or the interstate commerce consolidated appears to cost effective with the cost report preparation and prepared for the only moderate higher than the R1 and but greater than economic accuracy achieved in the consolidation. Solid should report with the material related to railroad-related activities of railroad business and enterprise, and ideally railroad activities account with the other. Each of the affiliated would specifically identify with the method most economically accurate and the most infeasible, even though if it is feasible, would not be expensive for the implementate. Two alternatives may be filed with specific identification and practical. The fair account for the affiliated may not be prorated using the appropriate allocation basis. Such method would permit the desired segregation reporting the railroad-related information, however, there is received in some of the limited economic accuracy. Some of the certain situation railroad may not find the cost-effective separate railroad-related non-related activities. In such cases, the railroad may exclude any entire affiliates based on whether or not they are predominantly railroad-related, whether or not they could continue to exist for the revenue derived from the support and provided with the railroad operations. The Railroad Accounting Principle Board tests that describe a relationship among the affiliates and significant potential to transfer the wealth through the transferring practices exist. The Interstate Commerce Commission provides that adopt the differentiate for the both and test for the apply for the railroad subsidiaries, but not the affiliates. Test states both, but for the existence of subsidiaries, the railroad would have to create an operation to provide equivalent goods services with other way to goods services provided but not readily available due to any railroad nature. While it may be easier to measure the unique railroad subsidiary, the Railroad Accounting Principle Board believes to do so and ignore a transaction with other affiliates required extensive procedures to ensure the integrity of the data reported for the transaction. Significant audit disclosure requirements would be required with the railroad-related transaction with the affiliates not included with the entity. Therefore, the Railroad Accounting Principle Board is a test provided with a practical method for eliminating the possible effects of manipulative transactions between the affiliated parties. Other commentaries have stated the specific identification with the segregation practical affiliated with railroads because of the accounting system as reporting practices has stated further inclusion exclusion affiliates should be made on the basis whether or not they are predominantly railroad related because of the specific identification method too costly or proration of the accounts method of not significantly accurate. The Railroad Accounting Practice Board believes the cost-effective segregation railroad-related effectiveness may be made in each of the bases of the economic accuracy achieved with the material on the information, cost preparing the information, data integrity. With an adequate audit coverage may be established for each of the alternatives, conserve the ability to rely on the internal control of the audit coverage required by the external financial reporting that favors either consolidated and with both usually compartmentalized organizational units of the subject independent audit requirements financial statement reporting on Rating entities not subject to external audit with the financial statement reporting establishing an adequate audit covering with required greater expenses. Data integrity also required the determination whether the transaction classification affiliated with the parties is recorded with the fair market value. The transaction may be between the railroad related parties, minimize such a consolidated entity. Fewer the transaction must be reviewed, thus making it practicable to verify the integrity of the remaining transactions. Alright, comparability. The railroads and enterprises that develop numerous organizations of structure of these activities, whether formed of the range of single or two multiple affiliates, structured with the function of the consolidated entity most effectively provides the comparable between the railroads use the consolidated entity most effective means for the comparing the returns of the railroad entity with the returns available for the industry. Our confidentiality, the alternative entities described and considered with the railroad accounting principle for confidentiality information is differently with the operative entity with the required the making the information publicly available presently maintained only for the internal use. The Interstate Commerce Commission R1 entity would not require any change of the disclosure information consolidation and annual reports would not require making the internal information available to the public. However, the separate reporting information about the railroad related activities may require additional disclosure about railroad-related affiliates. Alright, using the government accounting audit principle. The railroad accounting principles evaluated by the government auditing principles are basically developed annual and expensive information representing the result of the operation-related schedules in the R1 report. The government accounting auditing principles describe the preferred processes and procedures, general acceptance of evidence, the authority, recognition, object of the accounting with the professional, with the financial communities and general public. It represents the most practical method of the reporting of the resolution related with the financial statement. The government accounting auditing principles require consolidation reporting information in any two or more corporations. Alright, the entity principle generally requires the government auditing accounting principle to be applied with the railroad entity with the government auditing principles reporting entity. However, the regulatory purpose of the for the entity principle may require information about the entity of the small of the government accounting principle. Entity the situation relies with the government auditing principle not practical does not meet the railroad regulatory needs to identify the specific department. departures. For example, any principle requires the segregation of the railroad-related, non-related railroad working capital, segregated railroad current assets, current liabilities for separate reporting, load time, assuming the somewhat arbitrary, the practical solution. The Interstate Commerce Commission relies on a formula-based approach. Government commentaries are found on the Interstate Commerce Commission approach of acceptable measuring working capital. The operating entity represents the least cost-effective alternative, determining the entity through it does not effective in certain applications and increase the cost preparation, while it may be reduced economically accuracy with the cost greatest number of the failure to transfer payments. The prior Interstate Commerce Commission R1 entity represents the least change for the cost of preparing the reports. However, some of the cases may have been limited economic accuracy because of the relatively high number of affiliated transfer payments. Are using fair market value principle attributed with the economically accurate cost representation underlying economic transaction, traditionally underlying the economic value determined with the marketplace. The fair market value represents the result of good faith being knowledgeable of sellers and buyers. Transactions between railroad entity and others. Use of the other fair market values as basic recording of the railroad-related transactions between the railroad entity and those entities ensure that the further economic consequence of the transaction reflects such an approach intended to eliminate the concern of the transfer economic wealth. For unrecognized gains for the unregulated affiliated, all because of the railroad activity of the railroad, and neither recognize the difference between the cost of the book of the value of the market value with the transaction curve of the gain and loss attributed with the regulated investment must be included with represent the regulated operations. Because of the enhanced economic accuracy lessons concerns regard with the transfer of the economic wealth and fair market value should be accounted with the transaction with those outside the railroad. Any fair market value represents the value currently recorded with the most transaction because typically they are on lengths bankrupt the marketplace between the unrelated parties. Alright, reclassification of assets and liabilities. The amount of the time and gain or loss also concerning the reclassification of assets and liability between the railroad-related and non-related status. The amount of the gain or loss to be determined on the basis of the fair market value of its assets, liability, time of the reclassification. Determine whether the gain or loss should be recognized requires the resolution, confliction, objective, the conservation, proper matching, freedom of the manipulation, accuracy, theoretical, and performance of the railroad accounting principle believes the current recognition of the gain or loss best resolve the issue. Alright, conservation. The primary of the concern of the recognition of the gains of the reclassification violate with the conservatism. The content of this conservatism refers to the general perception of the understanding of the preferable overstating of the net income of the amount uncertain, according with the financial accounting safety student Standard Board Statement of the Financial Accounting Concept. Number 2, the quality of characteristics of the accounting information, the conservative, prudent reaction to the uncertainty, to try to ensure the uncertainty is a risk inherent with the business transaction, adequate consider, however, that it does not require the recognition of the income of begun time of the adequate evidence of the existence becoming available to justify, recognize the losses before the adequate evidence that they have been incurred. Conservatism must be constrained with the requirements of full representation, such validly discussed in Chapter 4, page 21, and assessing the prospect of that yet uncomplied transactions will conclude successfully. A degree of skepticism warranted. Alright, proper matching. The accounting concept of the matching requires recognition of the related values, revenues, expenses for the same accounting with the period, regardless of on which the receiver paid. For the principle of matching is often invoked for the base for the accruals, but the different deferrals under the accrue accounting of the Calder in 1970. The accurate accrual accounting is recognition of the revenue, expense of the gain, loss of the related with the increase, the decrease of the asset, of the liability for the goal, accurate rule accounting with the account of the effect of the transaction to extent with the financial effect of the recognized, the measurable, and period in which they occurs, instead of the deferring recognition of the other eventual side of the other opposite disposition. The effect of the reclassification regulatory purpose must be also considered regulation. It is concerned that the value of the regulatory investments based for the compromise, the asset used for the railroad-related activity, the regulatory purposes that are met with the transaction dealing with the asset-related investment based on the fair market value. The method of measurement can be viewed as an internal accounting convention with the use of the movement of the management of the regulatory. One of the commentator of the GAA, the government accounting audit principles, does not address the transfer pricing of the intercompany transaction presuming that the consolidated general purpose of the financial statements are not meeting the shareholder reporting any of the inter-company profit or loss and eliminated with the consolidated financial statements of the GAAP. Alright, freedom of manipulation. The ability to defer accelerated with the recognition of the gain or loss until the subsequent disposition provides an opportunity manipulating time and recognition value of the investment base. Such the manipulation occurred, the economic impact of the transaction is distorted. Two examples illustrate the potential for the manipulation. First case as assets for the book. Values exceeding the fair market value can be disposed of each any time of the high railroad profits rather than at the time of the asset left with the railroad related vehicles. In the second case, as asset required classified not related to the lease rather than disposed of permanently delaying the recognition of the gain or loss. When recognition of the gain or loss for the time of the reclassification minimizes the effects of the manipulation of the earnings may promote the manipulating of the regulated investment base through the repeated classification between the railroads and non-related status. The investment base of the regulation may be minimized through the adoption of principles and prohibit it. Economic accuracy. The economic substance of the transferring asset liability. Third party transferring the non-railroad related affiliate recognized for the gain or loss immediately identically reclassifying the asset liability railroad liability non-railroad related. And each transaction reclassification recognizes the asset liability or left or entered railroad related surface is not longer than relevant to measure of the regulated railroad activities. Each transaction, the railroad entity was an opportunity to receive the fair market value of the transaction, and the fair market value established for the transaction reclassification recognized that the occur with led more accurate measurement reporting with the economic substance for the transaction, deferring the gain or loss until such a time proceeds are accurately realized with the railroad entity would significantly destroy the economic substance of the transaction. Alright, theoretical preference. Theoretically, preferably, entity would be include only railroad activities provided with the information required to the accomplished regulatory objective of the Interstate Commerce Act for entity with the containing with the railroad related to activity. The value of the asset related required more with the railroad activity must be reviewed by the entity. Remove the asset value of the accomplished recognized 1. The liquidation distribution of the proceeds. 2. The distribution of the investors and non-related affiliates. The liquidation of the disposition asset of the purely railroad-related entity of the recognition of the gain-loss. The entity principle departs from the theoretical performable entity purely railroad-related with the permitting and inclusion of non-railroad-related activities consistent with practicality, data integrity of the principles. However, the entity principle inquires the information non-related activities include the entities to be segregated but reported separately. The separate reporting non-related activities enable the approximation result that would have been obtained with the railroad-related activities were included with the gain with loss recognized with the asset removed with the railroad-related portion of the entity, even though the classification of the non-railroad related entity portion of the entity with the manner of the identical treatment given with the entities of the sole related railroad related. Alright, the proceeds of liquidation fair market value of the asset retained with the non-railroad related property could only remain in the investment base for the demonstrated necessary for the supporting railroad related activity. Otherwise, they would be segregated and treated as if they had been distributed to the non-related railroad affiliates. Several parties commented that the compliance with the portion of entity principle would be imposed the substantial record-keeping burdens of the railroad. They stated with the additional cost of fulfilling the recording requirements associated with the recognition of the gains and losses when assets were classified but not justified with the compensate the benefits. The Railroad Accounting Board believed that the matter of the principal treatment of the reclassification of assets result in the economic accuracy instant of the classification assets and material application of the practicality principle permits the exemption of the entity principle exemption on the grounds of practical and are best included with the Interstate Commerce Commission in the case basis. Alright, applications effective the entity principle affects all the express regulatory applications addressed in the railroad accounting principle except for the railroad cost affecting foundation. Alright, chapter 6, cost capital principle.